All right, my friends, welcome to this video on trend trading secrets. So I'm going to show you a simple trend following strategy for beginners, but hey, it also works well for us advanced people. I still use this as part of my methodology to this day. In fact, I depend on it a lot, whether I'm trading Forex, futures, stocks, really any market. So here's the simple concept. Super simple. Take two moving averages. All right, here are the two that I personally like to use. I use the 50-period simple moving average. I use that as my general trend direction. So essentially, I'm generally looking to go short when it's angling down and price is below it. Okay, pretty darn simple. It's a very common used moving average, probably one of the most common. That and the 200 SMA, probably the two most commonly used. So I look at that for direction, and then I use a shorter term moving average. Now personally, I use the 15 EMA. And you could use a different one if you want to. Some people like the 9, some like the 20. I was actually originally taught the 20 moving average, but kind of like the 15 EMA better, just after a lot of practice and observation. There's no magic number. All right, there is no magic number. But the key is to use a much shorter and faster moving average, and here's the concept. So the concept is that we want to trade in the direction of the trend, but only continue to trade in the direction of the trend as long as the retraces hold the 15 EMA or whatever shorter term moving average you're using. All right, these both do. So these two cycle highs here, this one's touching the 15 EMA, and all these bars are touching the 15 EMA. So we're okay. This one too touches the 15 EMA. So the concept is this. When you're trading in the direction of a strong move, a directional move, in this case down, we want strength down as far as supply demand goes, money flow. And there's going to be natural ebbs and flows or oscillations in the market. But in order for it to continue to be a strong downtrend, when we get those cycle highs, we want them to be weak. So we don't want a lot of institutional buying coming in with big volume. We just want, usually at these lows, what you're going to get is a little bit of profit taking. So get a little profit, some people have shorted up here. Great, get a little profit taking down in here. Big shorting here. Okay, get some profit taking here, slows down the market. Retraces. Now, what you're not getting is a lot of institutional buying, which would crank this puppy up to the seventh heaven. Okay, we don't want puppies going to the seventh heaven. Well, maybe one day, but only after they've served out their full term and die in peace in their sleep. So that's the issue. So basically it comes down to this: strength down, weakness up. Strength down, weakness up. Strength down. And that's the pattern we want to keep seeing when we get these oscillations. And the line of demarcation will be your shorter term moving average to determine when you're getting weakness on the retrace. Okay, now let me show you what you don't want. All right, hold on here and I'll, let's see, we'll take this off and I'll show you an opposite example. Okay, so here's a great example. We have chaos. Okay, chaos, total chaos. So we get, first of all, the 50 EMA doesn't really sustain in one direction or the other for any length of period of time, right? Mine's colored, so you could see it's green, then it goes red, green, red, then get a little bit of green, oop, then it goes red again, then green, then red, whoops, there's a little green, then red, then green, then red. Okay, so there's no sustained direction, first of all. Second thing is that, okay, we come down here. Yeah, we hold the 15 EMA a little bit, but look, again, this is the key, is that your 50 EMA is still not angling up. So, and then we break that 15 EMA. So we get, it looks like some strength up, but when we retrace to the 15 EMA, the short-term moving average, trend comes out of the market based on our longer-term moving average. So therefore, nope, we don't. We're not going to use that as a trend indicator. Now it comes back down, goes below the 50 MA, but the 50 MA is angling up. So that's disjointed. Comes back up. 15 EMA is not above the 50 MA. So our shorter term moving average has not crossed above the longer term moving average yet. Now here it does, but again, we get mixed signals and changing of direction on the longer term moving average. Same here, cranks back down. By the way, notice what it's also doing. It's going above and below, above and below, above and below the 50 EMA. So there's no sustained trend, no sustained direction, and therefore there's no trend trades there. I'm not going to take a trend trade until we get the longer term moving average, in my case the 50 SMA, sustaining in one direction or the other, the 15 EMA getting above or below it, the price retracing to it, holding it, and then continuing. Let me show you another example real quick. Okay, so here's a good example. So here the market's been consolidating a little bit, comes up, makes it first impulse move up, holds the 15 EMA. By the way, it doesn't have to touch it. Don't expect the market to be, perfect to the penny, pip, tick, or pixel on your monitor. It's never going to do that. Makes a higher high, hold. Now notice, again, 50 EMA is sustaining its direction up. It's not changing color. It's just nothing but net, always up. Retraces, so strength up, weakness down, strength up, weakness down, strength up, weakness down, strength up. Now wait a minute, strength down. Boom, it just slices right through the 15 EMA. Look at that big red bar there. It comes all the way back down to the 50 and then bounces back up to the 15, which now provides resistance and goes back below. So that's the end of your trend. So we got our strength up, weakness down, strength up, weakness down, strength up, strength down. Ooh, no bueno. Right, and that's why a lot of people place their stops under here, which is one way to do it. Now, there's a couple of other things you need here. This is just simplified. This is a basic pattern, a basic price structure related to moving averages. Is this all you need? No. Two other things that you need very, very much is you need a timing indicator. By the way, happy to share with you my timing indicator. There's the information where you can go get a free recorded webinar. I used to do them live. I put them on recording now, so you can watch it whenever you want. And in that, I will show you actually how to set up that timing indicator or that cycle indicator. Absolutely free. Nothing to buy from me or anything. It works on pretty much any charting platform. So go get that, my cycle indicator, my market timing indicator. And then the other thing you want is a momentum indicator. And that will show you whether there's strength behind these moves or weakness even before you get back down here. Because sure, we could put a trailing stop down here, but look at all the money we gave back here. I'd rather see a momentum shift right up here to show me that there's underlying the price action. The price action's like looking at the ocean from the surface, looking at it from the beach, and you see the top of the ocean. But there's an undercurrent to the market. Ooh, that's good. There's an undercurrent, the current of currency. I like that alliteration. There's a current of currency underneath the surface of the ocean that a lot of people don't see. And that's momentum. That's momentum. All right. And I can teach you about that too if you'd like. But anyway, get the cycle indicator. Highly recommend that. That's absolutely free. And also I'll give you my rubber band trade. By the way, I showed you the rubber band trade here and you didn't even know it. So go get that. That's also available for free. One of my favorite trade setups. And give you a little tutorial on that. Teach it to you in about 26 short minutes. And that's my gift to you as well. Let's get you making some money before you spend any money. And this trade works so well, I take it every time it sets up. So my friends, hope you enjoyed the video. Leave your comments below. Any questions below. Barry Burns, Top Dog Trading, over and out.